Hello everybody and welcome to the session. We will be talking about the recent trends in the capital market industry. We have with us two experts in the industry, Dr. Vijayakumar, Chief Investment Strategist of Geojit Financial Services. Welcome to this session, sir. We also have with us Sriram, who is the Investment Analyst for Geojit Financial Services. So welcome to the both of you. Let me start off with Dr. Vijayakumar. India is one of the fastest growing economies. We've had a turbulent 2018 globally when you look at it. What are your inputs on the current economic scenario?
Indian economy is doing reasonably well now. During the last 2 years, we had two shocks to the economy. The twin shocks of demonetization and GST implementation. The economy has overcome the bad consequences of these two shocks, and as you said, presently Indian economy is the fastest growing large economy in the world. We will be clocking around 7.4% GDP growth rate this year. But then there is a disconnect between this GDP growth and corporate profits. The last many years, the increase in corporate profits has been disproportionate on the lower side. GDP has been doing well, but corporate earnings growth has been tepid. This is because of a large number of reasons. I am not going into the reasons now. One major reason is the huge losses being accumulated by the PSU banks. Right. Last year, for instance, PSU banks accumulated losses of 82,000 crores. By 1920, these losses will come down. It will become profits. This year also there will be some losses. So 1920 it will become profits. And that will be a major turnaround as far as the profitability of Indian corporate sector is concerned. Now, even though the economy is doing well, even though the macro picture is good, there are some major headwinds which the economy as well as the markets are experiencing now. This year, the major shock has been the sharp spike in crude, which happened in October. Now it has cooled off. So the sharp spike in crude led to widening of the trade deficit and the current account deficit, which in turn led to the sharp depreciation in currency. Indian rupee has been one of the poorly performing currencies in Asia this year. And also this had an impact on foreign investment inflows into India also. Last month witnessed record outflows. I'm talking about foreign institutional investment outflows. So that is a major macroeconomic challenge that we are facing right now. But there are some very strong tailwinds also for the economy and markets. The headwind of crude spike has now become a tailwind because there has been a 25% cut in crude prices. So our trade deficit and current account deficit will not go into dangerous territory. Rupee has started appreciating a bit. Foreign institutional investors have stopped selling in India. They have started making small purchases also in recent days. And from the market perspective, a major tailwind, a major favorable factor has been the sustained inflows from domestic investors. October we had record inflows of capital inflows from the domestic investors. That is a very healthy trend. That is good for the financialization of savings, for the capital market and the economy at large.
Right. So coming over to you, Sriram, as Dr. Vijayakumar was mentioning, we've had a very good October in terms of inflows into mutual funds through SIP route. What are your thoughts on that? The SIP inflows, good thing, bad thing, and what it shows for the future?
Yeah, sure. So, like what Dr. V.K. was telling, it's true that markets have been witnessing sustainable inflows, and the inflows has been very steady, pretty steady. Now, I would like to quickly give a breakup of what type of inflows that we are witnessing, right? So we broadly classify that into debt-oriented inflows and equity-oriented inflows. So if you look at the debt-oriented inflows, again within that you have liquid funds, which are predominantly a corporate parking vehicle. So there you have a kind of a toggling nature of inflows and outflows since February 2018. That has been very very curious pattern that we are seeing. And coming to the income funds and gilt funds, where both retail and corporates participate, there has been kind of outflows. Yeah, it's true that it started off when the interest rates started rising about a year back, and now we are close to 8% in the benchmark yield, and adding to that negative sentiment or the kind of rate hike feeling that is being spread in the market, you had this NBFC issues. So that has increased the fear among the people, and the outflows has been there, and we are witnessing now, I think
outflows in the liquid space,
in the income funds.
In the
income funds,
it's true of the liquid inflows.
Liquid has been very toggling. Like inflows are there, outflows are there. Like for example, about a month back we had record outflows, and few months back we had record inflows. And last month was an inflow in liquid fund. But in the case of income fund, it has been I think 5th or 6th month of outflows, and that is in excess of 25 to 30,000 crores, and that's something which we are witnessing. Now coming to the equity oriented funds, where predominantly retail investors are participating, right? That has seen consistent inflows. And I would like to tell you a shift in pattern that we have noticed is prior to 2014 or 15, whenever there was a market correction, there used to be a impact on the inflows and the folio additions that are happening in the market. But post demonetization, when this actual financialization of savings was started, like what Dr. V.K. was mentioning, it's a very interesting trend that whenever markets are down, we are finding investors are becoming increasingly matured in terms of handling that. So there are no outflows, there are inflows sustaining, and with the last 2 months, like for example September and October together, we would have markets would have corrected. I'm talking about the blue chip indices, would have corrected about 11%. But in these 2 months, we had folio additions which are like 5 or 6 month high, and then inflows has been good. And another point that we noticed was the ELSS space, where it's a typical retail scheme where a lot of people come for ADC savings, and this is the third month in the history that a non-JFM month is attracting more than 1,000 crores of inflow. That's a very good sign, which means people are trying to take advantage of the market correction to fulfill their whatever tax saving requirements are there.
That's a new trend.
It's a good trend.
So Dr. Vijayakumar, coming back to the markets, we've been witnessing huge rounds of volatility over the last couple of months. It has not just been the domestic scenario that has impacted the markets. Globally also, after I think in the beginning months of the year, we saw a little bit of stability, but now in the developed economies also we are seeing little cracks in their economic scenario. Your thoughts on that?
Well, the markets globally has been highly volatile this year. Last year was an exceptional year of very steady market. This year, the US market, for instance, has been very volatile. There are a couple of reasons for that. One, US economy is doing exceedingly well. Corporate earnings are also very impressive. Consequently, valuations have reached very high levels. And at high levels of valuations, there will be always, the markets will be vulnerable to corrections. That is why you are witnessing sharp cuts, 2%, 3%, uptrends and downtrends in the US markets. Then as far as emerging markets are concerned, there is a major problem, and that problem is the steady rise in US bond yield. The US 10-year bond yield touched 3.26% recently. So 3.26% return on US bonds means very safe, risk-free return. So money is flowing out from emerging markets to the US. And India also has been impacted. Sriram talked about the FII outflows, even though we are having robust inflows from the domestic institutional investors. So these are the two factors that have impacted the markets in this year.
Do you see more of a correlation between whatever is happening globally and what is happening in India?
Yes, there is a correlation. Globally, there is a very strong correlation between the performance of the markets now. And now, since we are in the run-up to the elections, the state assemblies, in some state assemblies are already underway, and we are only a few months away from the union elections. So this political factor also will be weighing on the markets going forward. So the next several months will be very volatile. Therefore, investors have to look out for opportunities of exploiting this volatility.
Right, sir. Sriram, coming back to the mutual fund industry, one of the, I should say, blockbuster moves by the regulator was the categorization of the mutual fund schemes. This categorization as a whole has created some confusion in the minds of investors. So, what has been its impact, and how is it going to help the investors in the future?
Yeah, so it was a massive exercise that industry has taken up and successfully implemented. It took a time. It took quite some months.
There was a little bit of pain also associated with.
Yeah, it was a volume exercise that way. And interestingly, this is actually to avoid confusion going forward. Though the time of implementation, there were a lot of news flows, and it took time for people to understand it correctly. In the long run, it's good always to have clarity on what's happening. So today you have a pretty clear, defined categories of schemes. So broadly, you have 5 categories today, starting from debt, equity, hybrid, others, and then you have the solution-oriented funds. And within each category, you have subcategories. So pretty much it's clear that today an investor want to get into some scheme. They know what actually they should look at. But interestingly, what has happened is something this we witnessed in the recent past is comparing the number of schemes as of September and the number of schemes that were existing in the month of March. The number of schemes has gone up in the open-ended category. In open-ended category, the schemes in terms of the 6 months period has probably gone up by around 30 to 33. Which is something which regulator actually doesn't want.
Yeah, I would have thought it would actually go down.
The objective is simplification.
The actually regulator wanted the count to come down, but in a way, but this is possible because today you have defined categories, and every asset management company looks at their product basket. So wherever you have a gap, they try to fill if there is a demand in the market. And interestingly, in all these categories, or the number of schemes which went up are on those categories where there is a demand, and that's something which they are trying to make use of it. And going forward, like we feel that to some extent this product gap filling can happen. This exercise may happen with some of the AMCs, we feel. So the number of schemes can slightly go up again from here where we are. Now coming to what an investor should, or what it means to an investor. I feel investor need not have to be too much worried about this count, right? So what actually investors should be more focused is about their goals, how that can be planned, and are they adequately saving towards that, and are they starting early or not? These are the parameters or the points that an investor should focus. And given the fact that there is a stream or there is a stretch of categories, and if investors are finding it difficult to understand what suits them for their goal and the kind of horizon they are looking at, it's always advisable to take the help of a professional advisors. So you have, that in our company we have a full-fledged investment advisory research team. They cull the numbers, they do a lot of research exercise, and they come up with the recommended schemes. So this will help a lot for especially the retail investors and those who are new. Those who are new to the industry as a whole, but they are very confident about the kind of economic performance that this country will witness, and they would like to be part of it. So they can take the help of advisors to have a more informed and more suitable investment decisions made.
Right. So this categorization will help for proper financial planning, I would say.
Definitely,
right?
Going forward it will help.
Okay.
Yeah.
Right.
But they need not have to worry about too much of, like for example, within equities, just to put it in perspective, right? Within equities you have 10 subcategories.
Right.
Now whether they need to look at all, no.
Yeah.
Only for goal planning, any equity scheme that they are looking at for say 5 plus, 7 plus, 10 plus years, you can get that entire thing fulfilled with about 5 or 6 schemes.
Right.
It all depends on how much money they are parking and whether that will be enough to take them there, and the consistency with which they are doing. That is very important.
So wealth creation, retirement planning, everything can be taken care of by these different categories of schemes.
So you have parking funds, you have growth funds, so you can decide among them.
Right. So sir, your concluding remarks on what an investor should do or should expect, how would you conclude this discussion?
Let me take up from where Sriram has left off. He said he alluded to that ordinary investors do not have the expertise to choose a particular scheme or choose a particular fund. They have ideas regarding their financial goals. So that is sufficient. They should be having a clear idea about their financial goals, the time horizon to achieve their financial goals, and with the help of professional financial advisors, then we can recommend the right kind of product for them. As far as our growth story is concerned, it is worth repeating that India's growth story is the best growth story in emerging markets. I believe there is a consensus on that. We took 60 years to become a 1 trillion economy. In the next 7 years, we became a 2 trillion economy. Now we are 2.6. We will be becoming 4, 5, 7 and finally a 10 trillion economy in the next 13, 14 years. And this kind of transition, the Indian economy, from a developing economy to an economic superpower will result in phenomenal wealth creation. So investors should participate in this wealth creation. And for participating in that wealth creation, they should be investing. Ideally through the mutual fund route, through the systematic investment plan. And as he said, by deciding what your life goals are and doing allocation of money based on those goals.
Perfect. Sriram, your concluding remarks on this?
Yeah, I agree with what Dr. V.K. has mentioned. These are all very valid points, and today that is what is actually happening. And today increasingly an Indian investor, average Indian investor, is becoming more and more aware of a strong financial planning need that they require in their life. So what is actually that is evident from the way the inflows are going. We spoke about that in the first part, and I would like to mention one point that I missed talking about at that time is the SIP inflows. So today, though on one side you have an exodus of FI money, foreign money, an equal or slightly more than that is being pumped by the SIP investors alone.
There's more than 9,000 crores now every month.
Yeah, it's touching close to that. And
so our dependence on foreign inflows also is declining.
Very right.
That is very good.
That's very nice, and this is something which is taking care of the local domestic liquidity itself. So otherwise, the markets would have witnessed much bigger swings, and the liquidity issues are taken care of at least right now. So they are understanding that this is systematic investments. Investing systematically in the market is very good, and it's working. It works in the long run, definitely. And another trend that we noticed was the interest investors are showing on the international funds. Unusually, they used to have witnessed consistent outflows, and for the last 5 months they are witnessing inflows. This is a very
I think some of the funds have actually given good returns in terms
particularly in the context of depreciating currency.
Right.
This is very desirable, and also as a means of geographical diversification. Formerly we didn't have that opportunity. That also is there.
And here this is again a point, advantage that's in the hand of an Indian investor. So sitting here, you invest, you try to take the advantage of the developed markets or the international markets, and that's done through a very professional route.
You can invest in the FANG stocks. Sitting here.
FANG stocks at a very negligible cost. It's very good, and that is something which is happening right now in the system. So net, I think going forward, the inflows are likely to sustain, and we recommend, or we sincerely urge every Indian investor to be part of this growth story. And mutual fund is a fantastic vehicle through which they can take advantage of this economic growth.
So thank you. There you have it. Our experts are unanimous in their comments. Stay invested in spite of the huge volatility that we are witnessing currently. Stay invested with your investments. If it is an SIP, continue with your SIPs, and even look at boosting your SIP amounts to take advantage of this current volatility. So thank you, Dr. Vijayakumar. Thank you, Sriram, for your time. Thank you very much.